All right, here is Thursday, January 11th. This was a CPI day. So anytime you have, CPI Fed, just know that the likelihood of there's going to be a lot of volatility. Again, you should never be biased and play the chart and just, visualize what could happen. A lot of times what I like to do is tell myself, if it doesn't do this, it has to do this, right? Or this. So there's like three options: either continue, reversal, chop, right? So you just need to know where those pivotal points are, to where you need to know where you need to set stops, or where you need to know when to flip. It just takes time. Understanding price action. But first and foremost, let's start off with the plan, a day plan. So, well, you can sort of already see what happened today, but I'll go ahead and show you. This was what the week has looked like. Yesterday, we shot up to the plus one ATR and the multi-day pivots. These are 30-minute candles with a 4-hour candle overlays. So I like to see, on a 4-hour basis, which breaks it up in half days, what is the trend? Where are some areas of interest? A lot of times where candles close or open are nice little areas to be looking for. So with that said, you see that, actually I'm going to delete this. I'm going to show you. So also, anytime where you see wicks, a lot of times wicks tells you that there's some buying going. So right here you see that they dropped it, and then you see there's a wick. So they bought it up right here and then continued. So with that said, a lot of times what I like to do is draw a marker right there, right? So wicks are super important, especially like if it was a wick into some kind of major level, because that really plays a pivotal role in the next day, right? Okay, so with that said, you need to understand where things are. So my plan is for the next day with CPI. In any case, this is resistance. Just because it goes above it doesn't mean it's going to have continuation. You just got to know. I mean, we're pretty extended already for the week. Anytime you're in an ATR, that's the range, average true range. So, but remember, these are 30-minute candles. So actually, that's the reason why I say the first 30 minutes or first hour is important, at least for me, because I want to see how the market reacts to that. Gives me a sense of direction, right? I want to know where the trends, especially if you're close to a resistance. You see how we were close to a support early in the week. You see how we were bouncing off of it, and then we kept on going. Now we're at a resistance, so I want to see how it reacts. So let's go ahead and look at what the day brought. So they ended up actually in pre-market. They brought it all the way up here, and they shot it all the way down here. And then when market opened, they opened it back up here. And then they kept on going. And then you can see these are 5-minute candles, 5, 10, 15, 20. They shot it back down. So you see how this 30-minute candle's forming. So here's another good thing that I do if you're setting up charts, is you could put the SATI ATR levels again, but change it instead of day, do multi-day, right? So you can have two. Sometimes it can get confusing, but sometimes that's why I like two different charts. But look, if you put that on there and then you make the line thicker, it gives you sort of a sense of like your oh shit line, right? So you see how this 30-minute candle is closing. So this was basically a look above and now fail, right? So they needed to hold above here by the end of that 30 minutes to have any possibility of continuation. So because they dropped below here, you can almost just set your, I mean, that's the perfect entry for a short for the rest of the morning. If you just got in right here, where would be your target? Your target on a volatility day. Remember, volatility, FOMC, CPI, things like that, and where there's news, you really want to be playing the multi-day pivots because that gives you the range. So really, your target would be this line down here, would be this mid-range ATR, which also somewhat coincides with the mid-range ATR for the day. So keep that in mind. Let's go ahead and I'll show you how the day came about, and then we'll break down each section of how you would actually trade it and not necessarily looking at hindsight. But for a planning purpose for the day, that is what I'm looking at. Where's my major resistance? And how's the market reacting? So just because this is pushing forward, you don't want to be chasing this, and you just want to wait. Just let things breathe. You got an entire day or an entire morning. There's plenty of opportunity. If you break down each segment as a 30-minute candle, it's easy to compartmentalize. So, okay, let's go ahead and look at the full day. So I'm going to go ahead and take off the ATR multi-day, and let's just look at regular. I'm not even showing you the ribbon either, because the ribbon's good only when the trend has been established. So in the meantime, you want to be playing off of levels. This is 5 minute. Also, I'm going to show you 1 minute. I actually might start playing with 1 minute because 1 minute could help you identify certain patterns, some consolidation patterns, and seeing which direction it could go. But again, my preference is always a 5 minute candle because it gives me a sense of how these wicks are closing around a level, because you don't want to be faked out by 1 minute. 1 minute you can easily get faked out. So let's draw our line, and this is going to be our noon line, right? Okay, so if we're playing, let's break down the day. Morning. So what did we do? We dropped into a level. We actually then broke below and they scooped it back up. So one would say, okay, one should go long. Okay, go long. Here's your stop. You have 10 points. So we should keep going, right? Well, no. I mean, this ended up the next TPO. It just ended up just smashing everything. Because ideally, by rules, that's what you're supposed to do, right? You also see that this line right here. Remember we drew that. That is important. That was yesterday's how that wick, that 30-minute candle wick, was closing. So you see how that was sort of bouncing off of it. Well, we just busted through it hard. And well, how do you play this candle? Well, really, you should have already been in right here. I mean, yes, you take profits from here to here, but if you're looking at the bigger picture on a volatility day, most of the time you're going to have big long moves. You're not going to have this chop. So you need to pick a direction, and that's going to be your high. So you take profits, and if you have multiple contracts, you're just holding, right? So let's look down at a 1 minute. So the reason why I'll show you the 1 minute is maybe to give you a sense of what things could look like. So this is your morning, right? So you see how the last 10 minutes of that 30-minute candle, they were chopping it around, up and down, up and down, up and down. So, well, anytime you see that, that's a potential flag, right? You'll see a lot of those, right? And those are really good to identify, especially near a level, because you know that the moment it breaks the flag, like right here, this is when that's a confirmation. Really, I would have got in right here and then risked to above here. And yeah, look, this is your next move. So this right here was telling me that because we could not clear here, we're either in a potential box play. Boxed as in we are closing this 30 minutes in the box. So they're going to do one of two things. They're going to either chop it in the box or they're going to have continuation, right? But remember, volatility day, CPI. So my bet is they're going to do more than just chop it around within this box. So here you go. This was really, really nasty. So you got 1, 2, 3, 4 within 5 minutes. These are 1 minute candles. It dropped. And keep in mind, make a note of this. The second fib in between a mid and a bull or bear, usually I see this where that is a good take profit for some kind of bounce. I've seen this a lot where it goes to 2 fibs. It's the same thing on the upside where it'll go up to 2 fibs and then reverse. Yes, it might get up to the full ATR, and that's what you're expecting at some point, but it may not do that when you have this huge push, right? So be very mindful, and this right here, you should have already taken profit. Big points right there. So, but you see how now this next move, you got consolidation. It goes up, down, in between these fibs. So this is good range if you were also playing in between that. But at the end of the day, you can see on a 30-minute candle, they ended up finding that support. And what do they do? They end up shooting it up, right, into this fib. So this could have been a play. If you knew that they were scooping it up, like this right here, this candle, when you see it break and then they wick it back up, look, there you go. You could have gone long, So that would have been like a double bottom and then reverse. So again, it could be a lot. That's a lot. But if you just get in at certain areas and just wait, like even if you got in here, and granted, you have drawdown, it eventually got down to here, right? But you would have lost a lot of points, along the way. So you don't want to get greedy. You're close enough. Take the move, and then if you decide to play again, you look for a reload. In this case, I probably wasn't looking for long. I was looking for it to push up for another opportunity, but when you see where the trend is, you want to just sit on your feet and wait if you're not good at flipping. So anyways, the next move, you can see that they were actually consolidating it in a flag, and then what do? They ended up breaking it out again, all the way up to VWAP, and then that line was close. So you cannot see this, and that's the reason 5 minutes is somewhat interesting, but you cannot see this wick. There's a wick right here that you saw in the 1 minute. You see how they shot it up, and within that 5 minutes, they shot it down, and then they closed it underneath. That right there tells me it's super weak. Like that the odds are they're not going to just drop it and then come back and then reverse it and go back this way. They're dropping it, but they're not going to make it easy. Let's just say that. So it's critical to get in at certain points. Don't chase. Don't have FOMO, and watch the price action. So this, if you shorted here and you got stopped out, okay, great, you miss it. Wait till it exhausts. Comes up here, you go for the short again. That is the best risk reward for your short. If it actually ends up breaking above, that's when you actually want to flip. You want to flip because it's gonna just squeeze back up. So anyways, it comes back down, breaks below, they scoop it up, they consolidated, and then eventually they dropped it and then dropped it. And then this next TPO, they opened right here, and then they just kept on going and going. But your entry for re-entry for the short after seeing this should have been near a pivot. And then if you see, let's look for a 10 points. That's right there. It was actually a little bit more than 10 points. So that's the scary part. A lot of times you almost want to have. I think 15 points is a good buffer. If you get in at a pivot, have 15 points. You pick a direction. You either get stopped out or not. So anyway, so here we go. We kept on going down. So now we're in a new TPO. Let's go over the rules again. So now you break hard. You are now consolidating underneath. And a lot of times what I see is it won't go necessarily all the way to the -1 ATR. Again, we are at a high volatility today, but in reality, we actually made the ATR. We made the range, because if you look, we actually extended past here, right? So in a way, we actually made the move. When I say full ATR, a lot of times what I'll see is you have a push into the bull and then you have a reversal, or you have a push into the bear and then you have a reversal to the ATR. So we did go to that. We just we extended a little past that. So that's why you always want to really watch out for this fib. And this right here was a perfect example. You just get in at a level and you just wait it out. So let's look at a 1 minute. 1 minute again, and we'll see what's going on. So you see how they, if you don't want to chase, you see how it came back up. You would have got in right here. You would never have gotten stopped out, and you just hold. And when you're holding for at least to back down here, and you would have made that. And that right there was from 810 all the way down to, I would just give it 780 area. So that's 30 points. So 30 points. That right there, if you make 2 or 3 of those moves, that should be your day. But see how the risk reward, where you want to get into a level. You don't want to be chasing. So now when it came down, they came back up. Eventually, they ended up dropping it. So here's the question that I always have to ask you. Where are we at 10:30? Okay, here, let's go back to, again, I'll do a 5 minute. Where are we at 10:30? 10:30, we are below a pivot, right? We're below, yes, we're above this pivot, but what's the closest pivot at 10:30? The closest pivot is the mid-range, right? So that means you got to ask yourself 1 or 2 questions. You cannot be, you in your mind, you might want it to go down here, but you can't be biased on what you want. You can only take what the market gives you. All you can do is look for good risk rewards, rinse and repeat every day. So if you're below here at 10:30, this is what you have to tell yourself. It either has to continue, or if it ever breaks back above that line, then we're going to squeeze and we're going to go to the next line. And then if we break above that next line, we're going to go even higher. And I've seen this move multiple times. And so if you ever get down to the mid level and you reverse and you break above the bull, the odds are the bear, your odds are you're gonna go to the bull or close to the bull. It's just inevitable. It's a V recovery. So let's take a look. So what they ended up doing is they dropped it, and then immediately they shot it back up, and you see the wick, and then they came all the way back up here. That right there should tell you that this is something's happening, and they're defending this area. That right there. So you see, then immediately the next 5 minutes, they dropped it all the way back down. So this is some big points, and that's why you also want to you just can't let emotions get ahead of you, and you just have to get in where there's a pivot. Like right here, if you would have just held for this and you set your stop right here, you would have got stopped out. But guess what? You would have been way into profit. This would have shot up. You would let it play out. You wait till it gets to a pivot, you short it again until it's resistance until proven otherwise. So you would have shorted here, bam. You would have, in 1, 2, 3 minutes, it came all the way back down. You would have had another move. But then now you have to start thinking, why do they do this, right? So now that's telling me that's support. So sure enough, what did they do? They held it. They held it like a champ. And they ended up consolidating this. They tried to break it out, and then they came back in. Came all the way back down, came all the way back down. But if you would have recognized this failed breakout reversal, you could have got in anywhere near here, and that would have been the low. We've seen that, remember, before on the upside or the downside. Anytime you have a failed breakdown at a level, this fib is a level. That's going to be really, really important. So what did they do? They ended up consolidating more, and then it wasn't until about the 11:30 candle they ended up breaking it out. And remember, as the rule states, if it's resistance until proven otherwise, I would never have shorted right here. The bears had their opportunities. Now any push up, they're just going to start squeezing it. So let's take a look at the 5 minute again. And you can see that last 5 minute, they closed it, and that was it. I mean, they didn't even retest it, right? So you see how this is consolidating underneath, and then, so this is clearly resistance, and now it's coming back above it. I mean, that could have been easy money on like getting in anywhere near here, and then your target is the bull flag, right? And what do they end up doing right at noon? They shot it up for the 12:30 candle right here. And 12:30 candle, though, why that's important is because that was a fib right there. Like if you actually drew a line right here, that's a fib in between that line. That's a fib in between the mid range and the 1 ATR. And look at that. At 12:30, they closed it right above it. So that tells me, you see this wick on the 4-hour chart. It's sort of hard to see. There's a lot of lines, but imagine this red candle came all the way down, this 4-hour candle, and they shot it up and they closed it back above. So then this is where they open. So a lot of times that is support for the afternoon play. And sure enough, that's what they ended up doing. And then a lot of times what they'll do is they'll fill it all the way back up, which guess what? They did. And that's why you also want to draw a line where the candles close on the 30 minutes. You see it came right up here. That was the 19 or the 985. So I know I'm like talking about a lot of things, but this is how you have to sort of like throughout the day, if you trade all day or in the morning, this is how you need to actually approach it. And again, you could have been done by noon. Look, I mean, you could have got most of this, and then you could add one more play right before noon. And the rule states, where are you at noon? Are you above or below a pivot? You were above this pivot after you just broke out. So the likelihood is they're just going to start squeezing it up. Now, ideally you want them to come back down on that 12 o'clock and retest, So that's the scary part, and unless you got in a good entry right here as close as a pivot, like you have to risk to below this. If you chase, you have to accept the fact that you might have to give up 20, 25 points to know whether you're right or wrong on the bigger picture, right? So unless you're scalping, but it depends on how you want to, how your strategy and how you want to actually play this. But let's go back to a 1 minute. You see how they were just like buying it up, and then they broke above here. So here's another pip. When you see it goes up almost to the next fib, here's the lines of fib, and then these are your levels. Look, you could have used it as a support. So when we came up, even at that 12 o'clock, if you got in right here, you could have risked right down to here. If you would have got stopped out, know that it probably would come down here, and then you could scoop it up again. So you can always have tight stops, right? But again, you're looking for you got to have patience and look for the bigger picture. If I'm getting in right here, my target is I want to see this, and sure enough, look, it went all the way up there. Be careful with VWAP. It's a good indicator, but you also have to know that when you're having a reversal, don't use it as a support or resistance, because much likely it'll probably bust through. So anyways, here you go. You have another consolidation pattern. Consolidate here. This is a lot of 1 minutes. You see how like you've just been sitting through all this chop, and you wouldn't know what's going on, but you almost you have to predict. And a lot of times, I say predict, you just got to get in and set your stops and know where's the next level. I knew that if it ends up coming back above here, it's going to squeeze. Sure enough, when it broke above, it squeezed. A lot of times on a 30-minute candle, the last 10 minutes, 5-10 minutes is when the move happens. If you look below here, look at my time frame. Right here it says 12:51, 12:50. So they dropped it down, and then that 10 minutes, that's when they made the majority of the move from this pivot to this pivot. And then what do they end up doing? Chopping around, shooting it up, and then they're just slowly one time framing up. See these 30-minute candles? They're green. They're just slowly moving up. But miraculously, where did they end up landing as resistance? They didn't go to the blue, which, I mean, ideally it should, right? But that line is super important. Well, why? Why is because, remember I was telling you on the 30 minutes, let's look. That 30 minutes, see how they're closing? See how that 30-minute wick closed? Closed. So even the 4-hour candle was closing right there. So that is super important, and that's where you draw your lines. But again, at the end of the day, you're just looking for XYZ amount of points. So even if you saw that they're consolidating above this pivot, you could have gotten as close as you can, and you could have shot for, say, 30 points. 20, 30 points is really respectable and easy. The full 50 points sometimes is difficult. unless you know the setups that you're playing. Here's a 50-point move. So anyways, this was a long video, but I wanted to show you throughout what I'm going to do throughout the series of videos. I'm going to sort of show you of what you need to be looking for to not get biased. Again, you see how the 9/9/30 candle is super important, and why I like to wait at least that first 30 minutes. Yes, ideally you want to see this push and have a plan, and get in ideally up here. But even if you miss this, I mean, there's plenty of points, 100 points right here, another 100 points right here, 100 here, but just know that I'd rather get stopped at 10 points and then be patient and wait for the 100 points, or size up with a lot of contracts and go for 50 points or 30 points and go from there. So pretty straightforward. It was a very difficult day because if you're not used to volatility, you're seeing these big drops, and you immediately you're gonna have FOMO, and you're gonna think I'm missing out on the entire move, because when you start seeing the replay, or when you start seeing this, it just like destroys your confidence. You're just like, oh my gosh, I missed the entire move, but at the end of the day, there's a reason why these are static pivots. They're not moving. You just got to trust in them, and know that you're going to get stopped out. There's no guarantee, but the odds are in your favor if you just see how the market reacts around it. And that's the reason why I don't necessarily like 1 minute, because you see 1 minute, very easy to get chopped out of the pivots. Again, 5 minutes preferred, but 5 minutes also requires you to wait until you see the candles close. So anyways, that is the day. I have no clue what they're going to do the rest of the week. That was a V-shaped recovery, but a lot of times what happens is you have these VOMIs. It's a weird name, but it's when you have, this shows that there's weakness. Possibly, if they come back down again and they start consolidating here, they might end up coming down here. My plan is they might end up coming down here tomorrow, and then possibly scooping it back up. And then what could end up happening is you could have, some kind of like consolidation pattern. A lot of times that ends up happening with this kind of move. And then next week they might end up either dropping it or going higher. So if they end up breaking back above here, say even next week, then yes, then on a bigger time frame, you sort of see that this was all of the last week. This was a dip, and then this is then going to just sort of grind up. Hopefully that was the high for the at least temporary for the year, because this is what I'm looking at. I would love to see that being a double top on on this kind of time frame, and then they end up doing this, somehow dropping it down here, and they consolidate this possibly next week. And then I think earnings is coming out. A lot of earnings are coming out at the end of the month. So maybe they might wait, and then we'll see if they end up like dropping it back out. Really, there's not, if you break back below this 500 area, the next really move is all the way down here. So you got quite a bit of room. But if you're day trading, you don't care. You're just trying to get little bitty points, 20, 30, 50 points, as much as you can, and then just be consistent every day. So there's your points, there's your points, move on. So, all right, good luck, and see you in the next video.